All right, welcome to Talk Tickers. Let's dive right in. Because Steel Dynamics just dropped an absolute blockbuster of a Q3 report, and believe me, the market noticed. So we're going to unpack the numbers, look at the strategy, and figure out what it all means for the stock. Let's do this.
Okay, so right out of the gate, the headline here is the earnings beat. We're talking a GAAP EPS, the standard accounting number, that came in a full 11 cents higher than what Wall Street had penciled in. And let me tell you, in a market like this one, a beat of that size, it doesn't just get noticed, it makes a huge statement.
And just to put that into perspective for you, take a look at these numbers. This wasn't just a tiny surprise. Not at all. They hit $2.74 per share. The consensus, it was way down around $2.63. That's not just beating, that's soaring past expectations. And it tells you a ton about just how strong their operations are right now.
So, how did the market react? Well, pretty much exactly how you'd expect. The stock just jumped. We're talking a surge of over 5% on the day of the earnings call, and on some really heavy trading volume too. It's clear investors loved what they heard. They were basically voting with their wallets, and that sent a very, very bullish signal.
So, what was behind that rally? What was the fuel for that fire? Let's dig into the numbers a bit deeper and see why this was such a clean, impressive beat for the company.
And you know what? It wasn't just about the earnings. Nope. Steel Dynamics delivered on the top line too. We're talking revenues hitting $4.83 billion. That's an 11% jump from last year. And that's so important because it shows this isn't just a story about cutting costs to look good. This is real, genuine growth.
So the big question is, how'd they do it? How did they pull this off? Let's get into the nitty-gritty, the operational details, and see what's really powering this whole thing.
Okay, at the heart of this whole story is one huge number, 3.6 million tons. That's how much steel they shipped. That's a brand new record for them, and it tells you two things loud and clear. First, demand is just incredibly strong right now. And second, Steel Dynamics is absolutely firing on all cylinders to meet that demand. I mean, they're running their mills at a rate that's way above the industry average.
And all that operational strength, it's turning directly into cold, hard cash. The company generated a massive $723 million in cash from its operations. And that cash, well, that's the fuel that powers everything else. We're talking growth projects, shareholder returns. It's what keeps their balance sheet looking like a fortress.
And speaking of returns to shareholders, you've got to love this. Management put their money where their mouth is. They bought back $210 million worth of their own stock just in this one quarter. That's about as powerful a signal of confidence as you can get. It shows they think their stock is a great value and that they're bullish on the future.
But the story that really had analysts on the call buzzing wasn't actually just about steel. It was about aluminum. The company's big strategic move into aluminum isn't just on track, it's actually accelerating. And folks, this is a potential game changer for their entire earnings picture.
So let's just look at the progress here because it's pretty wild. The team has already gotten qualified for industrial products and, this is critical, for beverage can sheet. That's a super stable market. But even more impressive, they've already got an early qualification for automotive hotband. Hitting these high-margin goals way ahead of schedule, that's a huge deal. It takes a ton of risk off the table and basically pulls the whole timeline for making serious money from this way forward.
Okay, so they just put an incredible quarter in the books. Now what? What does the road ahead look like? Let's get into what management had to say about the future.
And from the sounds of it, management is feeling pretty optimistic. They're pointing to what's basically a perfect storm of good news. You've got manufacturing coming back to the U.S., that's onshoring. You have a huge surge in infrastructure projects, and you've got new trade rules that are finally leveling the playing field for them. And hey, if interest rates start to come down, well, that's just going to be more fuel on the fire.
Now, to be fair, management was also upfront about a little headwind on the horizon. They do have some planned maintenance outages coming in the fourth quarter, and that could trim their flat-rolled production just a bit. But here's the key. This is planned, it's temporary, and with demand as strong as it is, everyone pretty much sees this as a totally manageable minor operational thing.
All right, so we've covered the stellar results, we've heard the outlook, now it's time for our take. Let's put all the pieces together and give you the next call's rating on Steel Dynamics.
So this really brings us to the big question for any investor, right? After a report this strong, and with the stock already having a nice run, what's next? Is all the good news already baked into the price, or is there still more room for this thing to climb?
Okay, here's what we're thinking. For Q4, we expect another solid performance. That strong demand should easily absorb the impact from the maintenance. We also see the stock's momentum continuing, especially as the rest of the market really starts to wake up to the potential of this new aluminum business. And really, that's the key catalyst to watch. The big question is, how fast can they ramp up that high-margin aluminum production?
So putting it all together, our rating on Steel Dynamics is a confident outperform. You've got this amazing execution in their core steel business, you have this massive new growth driver in aluminum that's ramping up way faster than anyone thought, and you have a supportive macro environment. To us, that just creates a really compelling case for more upside ahead.
So what's the big idea here? What's the trade? Well, we think the market gets the steel story. That strength is probably priced in. But what we think it's underestimating is the sheer speed and the margin impact of this new aluminum business. The true turning point, the real inflection in this company's earnings power, isn't even happening now. We think that's coming in 2026 when that super high margin product mix really comes online and completely transforms their whole financial profile.
This is not financial advice.